The opportunity arising from the global automotive transition towards electrification has been called by analysts as being nothing short of revolutionary. Given its implications in terms of clean energy, as well as its potential to remain resilient against inflation, the opportunity presented in electric vehicle is not one that often arises. EV stocks are increasingly becoming an investor favorite amongst a wide array of different investment classes. Governments, climate change activists, and even industries have hardly ever been on the same page, as they are about the potential of EVs. Even the notorious fossil fuel industry is coming to terms with the inevitability of electric vehicles, and has thus been adjusting its future-looking strategy accordingly. Therefore, in light of this critical transition, we bring yet another list of 5 great EV stocks that hold immense opportunity going forward. These could see one's portfolio soar in the upcoming years. To start off our list, we begin with the Chinese smart EV manufacturer, XPENG Inc, which trades with the ticker XPEV. China remains one of the most dynamic and competitive markets for EV companies, and XPENG is emerging as a key player. In the month of July alone, the company delivered over 11,500 vehicles, which translates to an incredible 43% year-on-year growth. Both these figures put XPENG above its regional rivals, NIO and Li Auto. This impressive growth comes despite outbreaks of different COVID-19 variants, and subsequent factory shutdowns. Despite taking the lead in China's highly dynamic EV space, XPENG has seen its share price plummet by almost 55% since the start of the year. This makes its valuation extremely attractive, given its strong competitive position, and annual revenue of $3.3 billion in 2021. The company is aggressively focused on dominating the Chinese EV market, even at the cost of its profitability. The company is still in its early pre-profit phase, with its EPS figures standing at -$1.10 and -86 for 2020 and 2021 respectively. Analysts hold a consensus of XPENG turning in a profit by 2024, when its sales are expected to reach close to the $15 billion mark. XPENG presents a phenomenal opportunity for those seeking to make an early move on this key player. Its valuation is extremely attractive, and its growth will skyrocket once it begins delivering positive EPS. Moving on to the second stock on our list, we present the small EV startup called ARVL, which trades under the ticker ARVL. As is the case with any tech startup, ARVL inherently holds a high degree of risk, yet the sheer promise it aims to deliver is phenomenal, and cannot be stressed enough. The startup offers a unique business model, which allows it to overcome the barriers to entry in EV industry. Instead of large multi-billion-dollar facilities, ARVL works with fully automated micro-factories that cost close to $50 million each. These facilities use proprietary technologies and robotics to minimize legacy costs. This feature significantly reduces heavy upfront capital investments. ARVL is far from being all talk and no work, as it has achieved several critical milestones towards the execution of its business strategy. One of its vehicle types, the ARVL electric bus, had received EU certification in May 2022, giving it a critical green light to move on with its plans. Similarly, its van-class vehicle was also certified by the EU, and given the go-ahead for production, which the company expects to start delivering to customers by the end of the year. The delivery company UPS has made a significant amount of pre-orders on ARVL vans by the end of the year, which would be a crucial catalyst indicating that its unique business model is capable of being executed. The startup is also collaborating with ride-hailing giant Uber with its EV car class, which it has stated will begin production by the third quarter of 2023. ARVL presents a unique, high-reward opportunity that is worth considering for those that can tolerate a certain degree of risk within their portfolio. Before we proceed to the next stock on our list, we hope the options presented in this video so far have been insightful. If the list has proven beneficial to you so far, do subscribe to our YouTube channel and turn on the bell notification. Furthermore, we also offer a morning newsletter to our email subscribers. You will get an overview of key earnings reports, recent insider transactions, analyst upgrades, and downgrades. To take advantage of this offer, you can find the link in the description box. If the list has proven beneficial to you so far, we would appreciate you clicking on the like button to show your support. The third stock on our list is BorgWarner Incorporated, which is better known amongst traders as BWA. BorgWarner essentially provides services to combustion, hybrid, as well as electric vehicles across the world. In the face of increasing demand, the company is currently shifting gears to go all in to cater to the EV market, in its attempts to keep up with the global automotive transition. In order to position itself for the surging EV demand, BWA has engaged in a number of deals and acquisitions that boost its standing in the electric space. Amidst the uncertainties and pessimism surrounding COVID-19, BorgWarner closed a $3.3 billion deal to acquire Delphi Technologies, in a strategic bid to strengthen its electronics segment, and better serve the EV market through a cutting-edge and innovative approach. As a result of Delphi contributions, as well as organic growth, BWA revenues in 2021 climbed by annual 46% to $14.8 billion. Similarly, on February 2022, BWA had acquired Akasol AG, the European battery specialist, in a deal worth €727 million. The move is set to add crucial EV expertise to BorgWarner, enabling it to perfectly capture the immense EV opportunity that is only set to grow further. These strings of acquisitions and deals are not by chance, and are highly strategic. BorgWarner anticipates the oncoming EV boom, and is positioning itself along those lines. The best time to buy the stock is before it begins realizing the gains of this ambitious strategy. Number 4 on our list of top EV players is the large company, Rivian Automotive Inc., which also goes by RIVN. As you may have realized, the global EV market is sprawling with a number of key players, each with unique strengths. So what exactly does Rivian offer that puts it a cut above its market rivals? The answer is simple. The company can afford to go big in the market. In addition to a robust balance sheet, with almost $15 billion in cash holdings, Rivian holds cutting-edge technologies that enable it to take on EV giants such as Tesla. Throughout the EV industry, companies tend to subcontract critical production functions to specialist parties. Rivian, however, is playing the long game, and hence is spending heavy amounts on developing both EV hardware and software, as well as cutting-edge manufacturing systems, instead of outsourcing. This move is likely to deliver the company structural cost advantages in the long term, giving it a substantial edge over its rivals. This strategy has already, at this early stage, been delivering stellar results to the company. Most notably is the large order by the e-commerce king, Amazon, which has pre-ordered a staggering 100,000 electric delivery vans. Given this promising strategy, which RIVN is very much capable of affording to execute, it could see itself as leading the global EV industry in the long-term future. The last stock on our list is the young company, EV Technology Group Ltd, which trades in the OTC markets with the ticker, EVTGF. The company is barely a year old, and has a market cap of a mere $93 million. The company's strength lies in one area that most EV players pay little heed to: brand equity. One way EVTGF has actualized this commitment is through the acquisition of Moke International, the company responsible for the legendary Mini Moke vehicle, which was highly popular in the UK and Australia from the 60s to the 80s. This motorist darling is making a comeback in electric form, and EVTGF stands as the biggest beneficiary. The company's entire strategy towards financial sustainability is focused towards enhancing brand equity. It would also allow the brand to charge a premium on its vehicles, and allow for differentiation against competition. This move could potentially be a core driver of market share capture over time. Demand for EV cars is far from slowing down, and will only surge with time. With this in mind, brand equity and differentiation could be the crucial difference between success and failure. Therefore, this approach is not one to take lightly, and could be heavily beneficial to the company in the long term. At present, its balance sheet reports a total cash holding of $1.2 million, which is sufficient to see it push through the upcoming quarters. That's all from us in this video. We hope the insight we aim to deliver has proven valuable to you, and would allow you to ensure your portfolio is well exposed to the dynamic growth opportunity present in the EV industry. We would love to hear your feedback about our list in the comments below. To gain a deeper insight into different stocks that are fit for various investment strategies, be sure to check out our website, stockstelegraph.com.